Welcome to Property Talk from Louise's Lounge. On today's episode, delighted to welcome back returning guest to our podcast, COO of Property Monitor, Zhann Jochinke. This is the man that knows everything about the Dubai property markets. We're very excited to have you back, Zhann.
Excited to be back. 4 years now.
4 years.
It's just flown, hasn't it?
It does, you know. We were just saying that. We were like, oh my gosh, 4 years. But thank you. It's always great to have you back. And as always, we want to do a good review of 2024. And you're the guy to tell us all about it.
We can definitely do that.
We're going to do some stats. So let's look at statistics. Let's look at off-plan.
Yep.
So still huge demand for off-plan. Why? Why is the demand there, and how does it compare with ready properties in terms of investment potential?
Yeah. So look, the dynamic shifted. Four years ago, we did our first one of these. The market was in a very different place.
Yeah.
Right? We've soon got to that point of COVID coming to recovery, and then you saw rapid price appreciation in the single-family home space, right? Villas, townhouses, and there was plenty of inventory then. We're at a point now, that 3-4 years later, where if you want to buy a ready property, you're paying sky-high prices. Right? Those prices for the most part have plateaued. They're not going up as fast as they were before. You're seeing much slower price appreciation in that market, unless it's been significantly renovated, but there's just a significant lack of ready supply. So if you're a buyer, right, or you're currently a renter and you're getting faced with a 10, 15, 20% increase, or you're new to the rental market and you're seeing these prices, you're like, well, I want to buy, but you can't find anything in the market. So they're almost being forced towards off-plan, which has really helped feed the developers' pipeline that's coming in. So you've got developers that bring a project to market, they're launching, and it's selling out for the most part. They're getting to that 90% mark within the first couple of weeks, first month. But for your big developers, your small developers, it's taking a little bit longer, but still, they're selling out or getting over that 90% mark within 3 to 6 months. So massive amount of launches happening, but the absorption is there. People are buying them. And when we look at supply, we're talking two levels. We're talking the supply of launches, and then what we're going to be talking about is when they hand over the supply coming to market that's ready for people to actually reside in and occupy. And there's going to be a tale of two stories when that happens.
Okay.
For an investment potential, I mean, it always depends what your circumstances are. Right? If you're buying for end use, it's one scenario. If you're buying as a buy and hold investor that's going to rent it out, it's another scenario. If you're buying as a more short-term focus where you're going to buy it and then exit upon a handover, or buy a ready property and try and renovate and sell it in a year or two, you've probably not got a lot of opportunity there, or there's an inherent risk with it. Buying something that's ready now and then with the intent of selling it short term, it's pretty high risk. Most of those deals have been snapped up. They've had $1 million invested in them. They've been renovated and they've sold.
Yeah,
right?
we still have a lot of demand, and we're like, they're just not available now.
Yeah. Even not to renovate, you want to buy something, move in, there's just not a lot there. And the ones that are there almost are priced out of the market. They've gone a little too aggressive on pricing. It's like you're seeing some sit now, especially in single family home. In the apartment market, there's still more inventory there. There's things moving, but that's the makeup of Dubai. You've got 65, 70% of the stock is apartment, and then the rest is split between townhouse and villas.
That's absolutely right. And look at the possibility of the off-plan, the supply and demand. We're going to see this shift. And what factors do you look out for? Because as you say, we're kind of like, when will this change? Even last year when we were chatting, we were like, the back end.
Get the crystal ball out.
We were like, going into 2024, we see it possibly leveling off. It hasn't.
No.
So back to that question again. What do you look for to gauge this market?
So there's certain things you can look out for. There's those canaries in the coal mine, right? There's the warning signs to look for that are there. I mentioned before, lots of launches happening. Right? There's a launch every 19 hours this year. Right? 370 units coming to market in the off-plan space every day.
Wow.
Right? But they're being absorbed relatively quickly. You've got a developer like an EMA that is pretty static in their offering of commissions, right, of payment plans, some slight changes, but they're also on a very aggressive launch, doing 73 launches this year. You've got your companies under Dubai Holdings, you've got your Majid Al Futtaim. They've all got pretty confident, they're showing a lot of confidence in their offering. Commissions aren't super high. 80-20, right?
90-10.
Yeah,
okay.
You've got at best probably those 60-40, bulk of it during construction. Commissions pretty level across the board, no ridiculous commissions from those guy MBs offered. They're not offering cars or gold bars, right? There's confidence. So they're not offering DLD concessions or anything there. So the first thing is to look at developers' confidence, because they have a really good beat on the market. especially the bigger guys. Right? They're the ones to watch. If you see an email offering gold bullion, pack up your bags, we're done. The market has turned.
Yes, yes.
You won't.
If they have to throw that in just for a sale, then it's like,
look, they did change recently, but that was on the back of they're doing a huge amount of launches. So I think it's more the point that they're like, we're doing a lot of launches, we want to sell it, be done with it in a month, move on to the next one, keep investors happy, keep going. We don't want to sit on unsold units.
But they've got to compete with other developments.
Yeah, look, an email almost competes to themselves, right? There's confidence in an email brand. The small developers coming in as the thing to sort of start watching as well. A lot of those have to come in and differentiate themselves to begin with post-handover payment plans or higher commissions to get on a broker's radar to begin with. During the summer, we saw some cars and gold bar incentives. That might just be a summer thing. It was from some of the players that kind of do it as an ad hoc incentive. If you see that become more mainstream, if you see people offering guaranteed returns and other things, what buyers need to realize is that most of those incentives are baked into the price and you're paying for it. And they are one-time incentives, right? You're paying for it and you might not necessarily pick it up in the resale market down the road, be it after construction, during, or 3 years down the line when it's an established community, right? A lot of those are just one-time things that are there.
Yeah.
You'll see free service charges, pretty much watch incentives, right? Incentives, concessions offered by developers will show that there is potential weakness in the market or weakness in their position. That's one of the things to watch. Absorption rates, how long it takes a project to sell out, and that sales velocity is one of the other things to watch.
So when there's no big queues outside of the developers' offices and everything's sold out within hours, you start thinking, oh, okay.
If you're starting to see a developer now that's selling out the majority of their inventory of a project in 30 days, and that goes to a quarter or 2 quarters before they get to those marks, that's significant impact on it. What happens in every market, it's pushed from that growth cycle to the downward cycle by one thing: oversupply. Technically, hypersupply is what it's called in the cycle. And it will happen in this market. It's not a question of if, it's when. And it's every market around the world. Here is just heavily affected by off-plan. And that will be the first market to be impacted. You've got so many developers, so many projects right now, yes, being absorbed, but it'll come to a point where that absorption slows down. It might be through a slowdown in population. It may be from a slowdown in investor appetite. They might go, look, I've got 5, 6, 10 properties in Dubai. I want to diversify. I'm looking at Singapore. I'm looking at the UK or the US because you don't want
putting all their eggs in one basket.
You shouldn't.
Yeah.
And as the financial market changes, or they may start to diversify outside of real estate back into other investments. You have to look. Those investors, they don't put all their eggs in one basket. Dubai has been great, but it's cyclical. They may slow down. So you'll see, I think, first in off-plan, in the ready market, in your established communities, I think you'll see a tapering off. I don't think you're going to see huge corrections. Our last cycle, that downwards phase, it was long and it was drawn out, and it was drawn out by potentially some missteps by developers and others thinking it was going to be short. They kept building when they should have stopped.
Yeah.
Right? They should have focused on what's in the pipeline, not
Didn't
gone.
read the room.
Yeah, right. Some of them should have considered, all right, let's land bank. We know we've got the land. Let's either just keep it there for future. But they went forward and they kept bringing more and more inventory into the market, which it just became supply demand, right? And that imbalance was there for so long, and it just dragged out. And you could see some tapering and leveling in the market, but eventually kept going down. And we spent 6 years of navigating a shifting market. So we've seen it now in the recovery side. It's gone up slow and gradually, which is good. We are now seeing very aggressive amount of project launches.
Watch this space. In regards to 2024, though, we have had a lot of record high sales for this. And why? What's going on? What is contributing to this growth? And as we've said, how long do we think this is sustainable outside of just the off-plan?
I think you have to look at the fundamentals of Dubai, right? Dubai is built around a couple of things, right? We're not an oil economy, right? We're built around hospitality, tourism, real estate, and economic growth, right? Bringing that in there. It's population that's growing to try and drive everything here, and investor appetite. You've seen a lot of reforms in the last couple of years, right? Visa reforms. Yes, we've seen corporate tax come in, but you've got a very liberal way to set up companies here, right? There's a lot being done to achieve Sheikh Mohammed's plan of driving that population growth by 2040. It's an aggressive number. It requires huge amounts of population coming in, but the policies are coming in place to help support and drive that. Right now, we've got population growth. Last year, it was about 3% year on year. 104,000. This year, it's trending around the same numbers, sub 3%. Last month, I think it was about 4%. So we've seen population go up about 115,000 year on year, 12 months rolling, about 150. That's probably what the year will end at. So population is still growing. To hit that 2040 number, it's got to grow at double that rate.
Well, they've got a lot of plans for the future, haven't they, to actually try
We'll get there. So the fundamentals are there.
Yeah.
Developers right now may be building like we're already there.
Yeah.
But bear in mind that you launch today, it's going to hand over 3-4 years from now.
Yeah.
And there might be some delays, but it will come to a point where we're going to have large amounts of supply coming in. There'll be downwards pressure on pricing, which might actually be a benefit. Dubai becomes a little bit more affordable. That could see another boost in population growth, because now it's like, I'm not having to pay 300 for that 3-bedroom villa. I'm now paying 270 or 250, or it's some downwards pressure on pricing.
I think for a lot of people, particularly residents as well, they've kind of watched the market. I'll wait a year, particularly last year. We're talking to buyers last year. I'll wait, and nothing's changed. And now they're priced out. So it will bring in another, demand from a new set of buyers if there's corrections.
Yeah, and look, we're also at the first rate increase scheduled, hopefully next week. We see 25 basis points come down in the US. That'll trickle on here. By the end of the year, we might see up to 75 basis points. Refinancing activity will start to spike. More mortgages will start happening. We've got record mortgages to begin with.
Yeah, we were talking about that earlier, weren't we? We were like, all the mortgages on the higher interest rates, what we feel is higher, but yeah.
Yeah, so you're going to have probably a perfect storm that's brewing 2 to 3 years from now. We're going to be out of this high interest rate environment, probably back to something that is relatively stable, rates being maybe as low as 2 points lower than they are today. More inventory coming on, so lower prices. So Dubai will be more affordable. That excites me. I'm a buyer then for various reasons, but it'll help keep that population growing. So we will have a, call it you want, correction, a shift, a change. I think it's going to be more of a soft change, a slower. It's not going to be
drastic.
Nothing drastic. Not this dropping down like this. And you have to remember, Dubai as well is very uniquely positioned in the market. We tend to be the net beneficiary to conflict within the region, be it financial, war, or otherwise. We're this spot that people want to come to. We're this oasis in the desert that is safe and very well positioned. And we benefit from those things. Over now, the next 3-5 years, there'll be other things that happen that drive more people in Dubai, even up far and beyond what the policies are put in place.
Absolutely, I agree. So let's look at the median prices for apartments, townhouses and villas. They're all quite distinct. What are your insights into the demand dynamics across these different property types, and what does it say about buyers' preferences?
So the numbers say one thing, but they're all also underpinned by just the generic makeup of Dubai. Dubai is about 70% apartment, and the rest single family home between villas and townhouses. The sales on a monthly basis pretty much follow those lines. If you were to say make it 50-50, I think the demand and the sales would follow that. I think it's just, there are plenty of people that want villas and townhouses, but they're not available. People want, we're talking before, they want larger villas and townhouses and larger apartments, but developers aren't building that way.
So they're settling for what's available.
They're forced to. It's what's available. So it's the supply that's available. The demand might be for something completely different, but at the end of the day, you need somewhere to live. So you end up having to make a compromise and settle. Those prices, the median prices across all three property types, slowly ticking up still. Price appreciation year to date is about 11.5%, 12%. August, our report's not out yet, but I can tell you the month-on-month increase was 2.48%.
Okay.
It is the second highest month-on-month we've had in this recovery cycle of, say, 45, 46 months.
Wow, okay. So another record month.
Pretty much. I mean, there were 2 months previously scattered throughout this recovery period of slightly more, 2.51.
Okay.
What's driven that, though, is largely this spike in off-plan. Right? So the index is a basket of 42 communities that we track. So communities in there, so take something like a Business Bay where consistently there's been ready supply and off-plan properties launching. There's been a healthy mix of both all the time. So you see a little bit of an increase there. But take an Arjan where there wasn't a lot of construction for a long period, and you've got properties there that 5, 6, 7 years old, they're getting a little dated right now. The design aesthetic and things are from a different period almost, sound like eons. They trade at, say, 1,100, 1,200 a square foot, where a new launch is trading at 1,600, 1,700. that, because it's within the basket, you're seeing those jump up significantly. But then when you look at Dubai as a whole and you put them together, it's showing more moderate growth at an emirate level. So if you look at this recovery cycle compared to the last, month-to-month increase is averaging about 1.2%, which is moderate, slow, healthy growth.
It's healthy, stable.
We're not going up 25, 30% a year.
Yeah.
Previous market cycle, we saw routinely 2.5%, almost 3% every month. They're numbers we don't want to see. So whilst prices keep going up, we're at all-time highs. Right? We're about, I think, 15% above the previous market peak. We've seen probably 50% growth from the previous market trough back in 2020. If we go back to 2009, we're up 75% plus. But it's a market cycle, right? It's getting to a point where you're going to start to see it showing some of those signs of having a little too much supply and start tapering down. But for now, there's no rapid price appreciation or scary things that are happening in there. But prices are still on the uptick.
I think if you're an investor that's in it for the long term, why not? You know, as you say, nothing's going to drastically change. So enter the market if you find what you want to purchase.
Be a smart buyer, right? If you're buying for end use, it's one story, right? The biggest question comes up is when the market shifts, can you handle your monthly obligations, right? Do you have job security? Do you have adequate reserves? If rates, they're not going to likely go up, they're going to go down. But if they did go up, do a stress test. Could you handle an extra 2 or 3% on your mortgage when it goes up? Look at those numbers, look at service charges. And if they check the boxes, if you buy at the top of the market and it goes down 10, 15, 20, doesn't matter.
Yeah, it makes no difference.
Right? The money you're saving, what matters is when you need to exit. Right? If you're in a position where you lose your job, can't afford those payments, or have to repatriate and can't keep the property as an investment property, then that's where the question starts to come in. If you're an investor and you're buying now and your intention is long-term renting, look, rents that you shouldn't speculate on what a rent's going to be 3 to 4 years down the line.
You got to do it based on right now.
Do it now, and then that's your test,
Yeah.
right? If this is the rent now, if it goes up 10%, this is what it's going to be. In all likelihood, if you're buying now, the rent that it is today might not be what it is in 3 years, 4 years from now when we have 100,000 units come to market in 1 year. But it's just being realistic about those returns. So what? You're not going to get a 7%. You have to settle for a 6 or a 5. Still great on the global scale of what you're getting on returns, and you have to look at it over time as well. It's about having that longer term horizon to things and looking at your risk profile and what's there. If you're in it for a quick buck, you may get burnt, and as far as I'm concerned, high risk, high reward.
You told everybody.
You get burnt, your own fault, but everyone's got their own risk profile with it.
Their own appetite, isn't it? So, and looking at 2024, have we seen any changes into the demographics of the buyers?
So we get a lot of it. There's no official data that really gets released that we can use on the breakdown of the population and the demographics and even the buyer profiles. We get a lot from our partners, from our developers. They'll aggregate, and we know developer and from a lot of the brokerages. And what we've seen is that core that has always bought in Dubai is still buying. So that core being your GCC nationals, British, right, India, Pakistan, they are the ones that
they've always been there,
and they
still
always
here.
will be.
Yeah.
Right? What we saw in previous years was a big influx of Russians. Right, that is showing a lot of signs of definitely slowing down, both on purchasing, off plan and ready, slowing down. There are some that are selling, but that money is being reinvested in the market, potentially to instead of one property now multiple properties, or they're investing in one at one price point, taking some gains out. We're hearing from some that they're looking at diversification in other markets, Thailand, Bali, other markets where Pacific interest is there. And they're also repatriating some of those funds back to Russia because there's a lot of incentives and high interest rates for them to do so. That's probably one of the biggest shifts that we've seen. There's also in the off-plan space, we've seen a decrease in Saudi investment. We'll talk a little bit before about it. I think that they are very smart. They've lived this story before, and they're sitting back going, it's a great place, we want to invest there, but we're
just
seeing
watch for a little while.
It's getting to the top. We'll sit and wait. You've seen a little bit of an increase in Egyptian buyers as well. On both off-plan and ready, the US has been a significant one. Canada was in previous years. Those Western markets coming into me is key. Right? That's an investor that typically is, this region's foreign to them in a way. and they tend to invest in markets that have greater transparency, right? A little more mature. So seeing an increase from those markets that weren't traditionally here, I think is very, very strong. The influx of Europeans that we saw during COVID, it's kind of tapered, right? No big changes in where if you look at the top 10, top 15, outside of those ones that I mentioned. So Russia, China, Egypt, Saudi, and the US are probably the big movers in the up and down columns on those.
What about it's been in the news a lot lately, the 6,700 millionaire British flooding to, are we seeing any impact there with the market?
Look, you see it in some of the, look at properties over 10 million, right? There's a significant change over the last 5 years, right? We've never done the analysis of other markets, right? And others want to do it. There's lots of different data sets to look at. Dubai apparently is the #1 place in the world for properties over 10 million US. I wouldn't really dispute it. You look at the numbers, it's gone from being, say, 4 years ago, a couple of dozen sales to this year, 200 plus, right? The growth there has been tremendous. It's been in the communities you'd expect.
Yeah.
Like Palm, Jumeirah Bay, right? Blue Waters, Talal Al Gaf, District 1, that's where you've seen a lot of those.
They're still going for those.
Emirates Hills still. Emirates Hills, I mean, there's not a lot of volume that changes there. But they're the communities that you're seeing. I think there's actually a lack of supply in those. If you were to add an extra 100 units being available, they'd probably sell.
It'd snap up, yeah.
I'm more interested in, by those people with that money coming in, are they coming and setting up businesses as well? Are they driving the economy?
What else are they bringing to the economy?
If it's just 200 sales a year, for me, it's not a lot of impact. It's a great headline, but it's not driving what we want to see drive, which is long-term, holistic growth here, where one of those billionaires come in and they create 100 jobs in the next year. That's awesome, because now we've got another 100 people that need, and families, so it could be an extra 300-400 people that now need somewhere to live. 50% of those might come from offshore relocating here. That's what we want to see.
Yeah, absolutely. Let's look at a couple of the top markets, top locations. So we've got Jumeirah Village Circle, Business Bay, emerged very, very popular, high initial sales and in resales. What is it about these particular two areas, different locations, that are being attracted by buyers? And is there anything else out there that we should keep an eye on, neighbourhoods?
There's some to watch, definitely. Those two communities, the reason that you see them top of the charts goes back to launches, right? 2 years ago, the highest launches was Business Bay. So now, obviously, you're seeing more sales from those and then resales. There were a lot of plots there that were available, right? It's now being built out. Downtown, not so many plots available anymore. You're not seeing as many launches. I can count on probably my fingers and toes how many plots could be built on in downtown.
Yeah, exactly.
Right? Business Bay's got several, right? Along that Business Bay water canal, which then goes up to the Dubai water canal through Jumeirah and the area, they're hotspots, right? That's waterfront property that was designed that way for a reason. So there's been, Business Bay has been basically, there's nothing in downtown, so let's build right next door to it, right? And you're seeing it become, look, Business Bay wasn't a sexy location. It's starting to become a bit better with that, right? Things are changing there. You've got, I mean, look at Peninsula. Peninsula, I mean, you're in there, they're having it almost as a self-sustaining community, so you don't have to deal with the headaches of Business Bay and other things. A plot there just sold for 650 million.
Wow.
The last nice big plot there, we know who bought it. It's going to be stunning what they're going to do there. JVC is, I don't think people realize, it is a massive, massive community. By 2027, we're looking at another 24,000 units to be delivered there. That will bring JVC up to probably only being 80% built.
Okay, so still
another 20% on top of that and everything else that's there. It's huge. It's got a variety of different price points and developers that are in there, right? It's Nikhil's master community, but Nikhil hasn't built much there. You've got like
all the private developers, smaller developers.
When Ellington went in, it elevated the community. They built a product that typically was above what was there, and I think it also helped drive up what was around there. You've had Bloom go in there, you've had Benghazi that's always been there, and they've even changed their design aesthetic and quality. And you've got some of the newer developers coming in as well that are largely, I mean, I think, give a lot of credit to Ellington here, they're mirroring what they did. They're changing the quality of product because I think they've seen, there's a market for it.
Yeah, people want to have that quality.
It's actually really good. It's a reasonable central location as well.
It is a very good location.
Not a fan of the roads once you get in there.
They're working on those.
But you'll take it.
They're working on those.
Look, it comes down to plots being available there. You had a lot of guys that land banked in JVC, bought plots, right? And now they're doing JVs with other developers coming in. And
It's very popular now.
you get people complaining plots unavailable. They are, right? You're just not getting them at the favorable price you really want. And some people were smart and land banked in the past. Right? Arjan's another community, right? Which tons of stuff has been available. There's a lot of growth that's happening there. Marjan as well, the Zhanns.
All the Zhanns.
But then even more, the 311, 611 corridors, you're seeing new master communities come up. That's where that's where I'd be paying attention.
Okay.
Right? We've got the stuff that went huge leaps out into the desert, right? So first to Mac Hills 2 and then the valley. Now you've got some stuff coming closer. So where Cherrywoods is there, you've got Demax, a couple of communities that are coming online there, come even closer in, and you've got where Aldar's had their JV. They've launched 2 of their big projects so far. They've got a third one that's coming right in sort of the Marjan area, right behind here as well, and that massive land that's there that we're waiting to see what will happen.
Just behind By Hills.
Yeah.
Yes.
You've got the Acres, which was going to be the plantation equestrian and polo club that was stored and abandoned years ago. So Dubai Holding Ras has picked that up, and that's coming in there. You've got right next to ranches, you've got Gaff Woods coming in, which is going to be all multi-family apartment buildings there. They sold it their first 2 phases like that.
Yeah.
So on the back of someone that's done incredible stuff in the single family, now going into multi-family. So looking at sort of that 311 corridor, I have my eyes on there. Next to that, and the 611 corridor. There are long-term metro plans, and I'll say this to the camera, no one get excited about a metro until the government officially announces it and said, we're starting construction. You can look at the long-term metro plan. There's about 8 different colors on there of lines that are proposed. There are, I think, 3 right now that have been confirmed, 2 that are built, 1 other that is started. Until you see those announcements from the government, we're starting here and anticipated here. Don't make
cautious if you're purchasing.
I would not make an investment decision on it.
Just on that.
The plan has 2 that go through JVC. Neither is confirmed as the start date yet.
Wow.
There's one along the Al Qudra corridor that will be a game changer.
Yeah.
Right.
For all those communities out there and the communities that are a bit further field, like you say, you'd Mac Hills too, and things like that.
And I mean, another thing to look at infrastructure. Look at where they're building roads. Right?
Have you seen Sakim?
Yes.
Did you come on it today? It's amazing. No traffic lights.
Yeah, I love it. Get rid of traffic lights and roundabouts, please.
Yes. It's like Sakim and Hessa, it's all happening.
Yes.
It's all happening.
Hessa finally will be widened and not the worst road in Dubai.
Excellent. So exactly follow the infrastructure of where they see.
Look at that there, but also know these projects take time.
Yes.
A road is quicker than a metro, right? But the Dubai government will announce things formally. Play on that. Also, let me cast a word of advice or warning almost. Developers love to put out nice and flashy marketing materials. Right? Take a look at what's built next to it and what's potentially coming up.
Yeah.
Right? Some of these big buildings coming up have big buildings zoning right next to them, and they come up next to them. So
you've got to do your research of everything that's surrounding you if you're going into one of these emerging
use
areas.
A good broker, right?
Yeah.
Like developers are there to sell, the brokers are there to sell well, but broker can do a little bit more research that maybe the developer hasn't got their salespeople acknowledged about, right? And do that to go around. What is going on that plot next door? Like, even here, just buying on the water is not always a safe bet. Right? Sometimes an island could pop up in front, but at least have a look. Ask some questions.
Yeah, do your research on it. If we can go back to a little bit on the rentals, we touched on it quite briefly. Do we have any stats on the rental market? There's a lot of residents out there, the tenants, they're thinking, do I buy, do I not buy? They're paying high monthly, maybe mortgages might be a little bit less. Any statistics, any significant changes? Is there a slowdown, an increase? What's going on with the rentals?
So, high volume of rental transactions. I think this year, so what we're in September now, I think we're looking at the numbers last week, residential contracts, I think there's about 420,000 already, which puts us on pace for about 600,000 by the end of the year, which is a slight uplift, 60-40 split between new and renewal, with renewal being the higher point. Average increases, in some communities looking higher than what the rent index may allow.
Oh, really?
I think some of this is unscrupulous landlords taking advantage.
Quite knowing their rights and not just kind of not wanting to unsettle and.
So I'm one of them. I signed a 3-year lease with my landlord. I gave them more than what the increase was there. It was a win-win.
That's a safety, I suppose.
So my biggest thing was I want to be here long term. I understand your position as a landlord. I know my rights as a tenant, and it's a win-win. I want to give you more if you give me that security. So they're getting higher than what the increase would have allowed this year and likely next year as well. And we've got a 3-year deal and we're both happy. Right? There's a good amount of that now happening. Before, there was a lot of people not knowing what their rights were. I think there's been a lot more education both by brokers to their clients as well as publicly, where DLD has come out on radio shows, you're hearing it as well. They're talking about it. People are offering legal advice with it. Tenants know that they can't be bullied. Some are actually using it to their advantage though and going, all right, I know you can't do it, but let's work together.
Yeah.
Right? And they're
you want to have a good relationship. It's a win-win situation.
It's the best thing to do. So the renewal market, I think, has started to become a little more stable, less funny bugger games going on.
Go and try and find another property to live in, you know, it's like the thing. It's like whenever anybody's, they've 12-month notice, where do I move to? You're here at the moment, they've got to move a little bit further out.
Yeah. In the new market though, I mean, there are some that prices still are staggering where I'm seeing them go up to. They have in some tapered off. If you've got a new renovated property, especially a villa or a townhouse, the premiums they're getting over the renewal rates are phenomenal. They could be 30, 40, 50% higher than what a renewal rate is. But that's the open market. Right? Villa and townhouse, I think you'll start to see some, when these handovers start happening. We saw it when Arabian Ranches 3 launched, or when those handovers were there, sorry. In general, the surrounding markets, price appreciation halted a little bit, less aggressive in there because there was more supply. So the demand was like, all right, so it's going to be 10 minutes more drive, taking it because I'm going to save 20 grand.
Exactly, yeah.
Right? As more handovers happen, the same thing's going to happen in these villa and townhouse communities. Same thing in the established apartment communities. When there's more supply there, it's going to put downwards pressure on. You've got some stuff in Shoba Heartland, Azizi Riviera. As that starts to hand over, that area will start to have those downward pricing pressures.
You just hope it happens just in time for your renewal.
Yes.
So, please. So do we see, or crystal ball time as well, as we like to put you on the spot, do you think there's going to be any significant changes, say, over the next 12 months that's going to see either buyers enter or sellers leaving?
Oh, the crystal ball. The feeling has been that it's been coming for a while, but the market just keeps to amaze with what's happening. It does.
It defies all logic sometimes.
It does. Look, record mortgages in a high interest rate environment. No one else in the world doing this, but to buy, and it's new mortgages too, right? It's always, we talked about it before, it depends on what your long-term plan is. Good time to buy or sell is a loaded question, and it's very personal to each person that's there. Market factors right now, that price appreciation is relatively slow and gradual. I'm saying this on the back of a second highest month, but I think that you'll still see it's not going to be 2.5%, 3% month on month coming. I don't foresee that.
Yeah.
I think a lot of it is being skewed by off-plan launches that are there. There is going to become a time, and I mentioned the things to watch out in the off-plan market. That will be the first to turn. Right? When that happens, you'll start to see it. The when is so hard to put on there. The pipeline of new launches that are coming is incredibly aggressive and robust. But the demand is there. It's to watch out for those. In the next 12 months, I think it's going to be unlikely to see anything major. And even when it does come, I don't think it's going to be one of these drop off the cliff moments. You
can see the natural change with the developers, the launches slowing, natural.
The biggest thing is going to be is when it happens. And by when, I mean probably a quarter or two after we see it slow down. That's when people should be taking steps where developers should go, right, we're not launching any new projects. Right? Or we were going to launch 3 more in the next 12 months. We're just launching 1. We're not going to keep putting excess supply into an already saturated market. They're going to be tough decisions for people to make. Best time to buy is always at the bottom, but you never know it's the bottom, right? Until you're a quarter or two past and you're confident. Typically you get to that point, developers start building, the big developers, and then the smaller developers come in, and then the brand new developers come in. And then when's the best time to sell? At the top of the market, but you can never time the top. It's always a little bit afterwards. So
yeah, you just see it starting to turn, you think, okay, sell.
Yeah, if you're a seller, right, don't expect to sell at the top of the market. Get in mind what sort of return that you're comfortable with. And you might be at that point already. Why not sell now? Lock in those returns, right?
Kind of don't be too greedy a little bit, isn't it?
Essentially,
it's like,
don't be, right?
Why are you waiting and you're happy? Just
could go up another 5%, 10%, 15%. Could also go down pretty quickly another 5, 10%. You don't want to be in a market where it goes from having 100 sellers to 1,000 sellers. Right? That's when prices, instead of trying to get a little bit more than the last sale, it's going to be a little bit less than the last sale. Don't be greedy. Lock in a good return. Right?
Be able to choose when you exit and be happy.
Yeah, be happy. Like if I were an investor looking at it, I'd be going, right, I bought it at X, I want to sell it at Y, so I make Z. Right? And once that's there, that's when they should start to consider, all right, I'm in my exit window. And any more that it goes up, great, but be happy with, set a number and be happy with it. Right? And if you're buying now, have a long-term horizon. Right? Weigh up do your sums, right? Know what it looks like today, tomorrow, in different scenarios, and always look long-term. Short-term, speculators, be warned.
Yes. Yes, we would never encourage that now. It's a lot more stable and mature, the market. So no in and out flipping. We don't encourage it. Well, thank you very much, Zhann. As always, very delighted to have you here and very insightful and a lot of information there. And yeah, I think should we have the same conversation this time next year?
Let's book it in, number 5.
Let's do it. I appreciate it. Thank you again.
Always a pleasure.
Thank you for watching Property Talk from Louise's Lounge. Hope you've enjoyed today's chat. And as always, if you have any questions, suggestions, any topics, please do reach out to us, and we hope you tune in again soon.